Good morning, everyone. And today we're going to be doing top to bottom analysis on Australian dollars, Canadian dollars, starting from the 1 week time frame. And as we usually do, we'll start our analysis by identifying our zones. Our zones are support and resistance levels on higher time frames. So wherever you have support and resistance levels on higher time frames, such as a support level, a resistance level, a resistance to support level, and a support to resistance level, they are all collectively known as zones. So starting at 1 week time frame, the first thing we're going to do is to identify our zones, which are support and resistance levels on higher time frame, and then our trend lines, if we can spot any. And then after that, we'll go down to the daily time frame, and we'll do the same thing. We'll identify our zones and our trend lines. So we have a trend line here, although it has already been violated. We have a trend line here, but it's already been broken through. It's a 1 week trend line. So we also have another trend line here. So these two trend lines are our weekly trend lines. The bearish slanted, the downward slanted trend line has already been violated. These are our currents, or this upward slanted trend line has not been violated, so it's still valid. It's still a valid trend line, which is still influencing the market price. We have support to resistance. We have resistance to support to resistance at this level. So we have a zone here. We have another weekly zone here. Okay, so now we've identified our zones and any potential trend lines. So let's go down to the daily time frame and identify our zone. Now go down to the daily time frame and do the same thing. Identify our zones as well as any potential trend lines. So we have a zone here. We have a daily zone here. Let's see if there are any other zones we can draw. We actually have a trend line here, but I don't think it is still being obeyed. But we have a trend line here. Let's make it gray to distinguish from our trend line. We've made it gray to distinguish it from our weekly trend line. Okay. You can also draw another trend line from here. Okay, that fits better than I thought. You can draw a trend line from here. We can also draw a trend line like this. Let's delete this one and maintain this one. So this is our daily trend line. So now that we've identified our trend line as well as our zones on the daily time frame, the next thing we're going to do is to identify our trend origin. That is to say, price is currently in an upward trend. So when did that uptrend start? Trend origin is the point in which price switches from a downward trend to an upward trend, or from an upward trend to a downward trend. And this here is our trend origin. Because you can clearly see that price was previously in a downtrend before getting to that point and switching from the downtrend to an uptrend. So this is my trend origin. So this is now our market structure. Impulsive. Hold on. Let me move this. Okay. So now the next thing we'll do is to identify our market structure. So from the trend origin, you have an impulsive move here, a correction out here, an impulsive here, a correction out here. That's a ranging correction out, an impulsive move here, a correctional move here, and what do you know? An impulsive move here. And that impulsive move has clearly just started. Price will continue to be in an uptrend so far price keeps breaking highs and not lows. Price is just breaking this recent high that it made. It has only just broken it by a small amount. So that means that we're expecting price to be pushing up at least for the remainder of this week and even for a good portion of next week. So let's continue to identify our swing highs and our swing lows. So this is our swing lows or our higher low. We have a higher low here. We have another higher low here. And this higher low here has just been confirmed because price just broke through. So then we have higher highs. This is a higher high here. We have a higher high here. And then we have a higher high here. So we can delete this. Typically, the next thing I would want to do is to go to the check the points in which price switches from a correctional move to an impulsive move, to be able to look for a pattern so that I will know when to be able to look for a pattern to identify in the event that price is switching from an impulsive move to a correctional move, so that I can get in on the impulsive move ahead of time. But there's no need for that since the impulsive move has clearly already started. So the only thing I'm going to do is to go down to the 4-hour time frame, check out this market structure on the 4-hour time frame, and see if we have an opportunity to buy based on market structure. So what do I see here? I can see impulsive, correctional, followed by impulsive, followed by correctional, which is now followed by a new impulsive. So I can enter this trade like this. I can directly enter from this current point here. On the shorter time frame, price has not yet broken this correction. That is to say, this swing low has been confirmed. Let me make it green for the sake of difference in time frame. This swing low has been confirmed, but then this swing low here has not been confirmed. So based on that, we want to move our stop loss here, but then if we move our stop loss below these points, our stop loss would simply be too wide. So let's go down to the 1-hour time frame again and see if you can see any extra details to help us shrink shrink our risk. This is unconfirmed. Let me write it. Sorry, higher low. So that's an unconfirmed higher low. So let's go down to the 1 hour time frame and see what extra details that there are to notice. There are not any particular extra details that we have to notice, but then instead we can do this. We can, our stop loss will be here, and then our entry will be here. So that means that at the current point in price action, we are waiting for price to break through this level. Let me change the color. Let's make it green. So the minute price breaks this green line, we'll enter the trade. Let's go back to the 4 hour time frame. So then how far should our expectation be? We should be able to expect typically how I estimate my expectations. I measure this. I measure the previous move from here to here. Where did that happen? I measure the previous move from here to here. So I have a total of about 264. So that means that I should be able to expect at least half of that. So half of 264 is 120. So let's take it somewhere like this. I should be able to expect it to get to at least 180, 200. So that's it for those both analysis on Australian dollars, Canadian dollars.